How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on US dollar versus the Swiss franc. As you can see today, the daily candle is about to finish closing in about 8 minutes. Today, Tuesday, took out Monday's high and then traded right back down. Now, technically, what we have right now is a higher swing low. So this last week, Friday, is the swing low that's higher than this one here. So there's a higher low on the left and a higher low on the right. So this technically makes this the higher swing low. Now, this could be the pivotal moment, right, where the market's going to make another leg higher to probably take out the swing high that it formed up here before pulling down. However, we're still within Friday's range. This is an inside bar. All these candles right now is inside Friday's range. This high to this low, price action is stalling right now. So it's almost as the market is moving sideways because it hasn't gone anywhere significantly because of this large range that it's trading inside of. Now, what I would like to see right now, since we did get this third candle in this swing low to be broken, I want to see if price action is going to give us a high probability raid to this candle's high. So I want to see if Wednesday, tomorrow, price can drop down, right? Drop below a discount opening price, whether that's midnight opening price to kill zone's opening price. I'm not sure if it's going to get below the weekly opening price because we are above it, and then give us a discount or oversold buy opportunity for us. So price should push up and take out this high formed on Tuesday if this week is going to continue to trend up. So if we take a look intraday, just briefly, you can see we talked about that New York session with the private group, right? Shout out to the private group. And Tuesday here, we got a simple accumulation, manipulation, distribution. As you can see, there was some type of accumulation going into London. London manipulates traders up to the upside. New York continues the distribution to the back downside, right? Retracing it back down, takes out the Asian low. So utilize the Asian session range. We talked about this before. The Asian high being broken, there might be a reversion back or revert back down to the Asian low, and it was perfect. We talked about that today in the chat. It was fantastic. Now, like I said, if we're going to still continue looking to be a buyer, right? So technically, I'm looking for a high probability raid to this high. I want to see this high rated now. How do we get there? Maybe we accumulate, we drop below midnight opening price, maybe even get below, back down, or test Sunday's opening price. And then we shoot back up and take out this high here. If not, we're going to go lower, and then we're going to see price either retrace and continue a lower swing high. It was a false break to the upside on the daily chart. So we talked about how price broke this high. It's either going to be one or two things, a false break or a bullish trend. So we're waiting. Now we're following the steps of trying to catch the trend. Now, if this candle closes down, we may have a great counter trend candle to go buying on an ideal trading day, Wednesday. Because if this trend is bullish, buying after down days typically is ideal. You had a cheaper opportunity to get into an uptrend. So pay attention to what happens tomorrow. Whether or not we're right or wrong on the speculation, we haven't taken any major positions on looking for a swing trade yet because we want to confirm the trend. There is still this PDA right here. I do suspect maybe price will pull back in here. It's not out of the clear yet. There's a possibility. Let's take a look at the DXY. DXY traded up and traded right back down. Right, gave up a lot of its gains there. Still might want to pull back into this inefficiency. We know the bond yields, like the 5-year, 10-year, 2-year, 30-year, they've been selling off. And dollar hasn't shown signs of sell off yet. So is the yields trying to fake people out, or is dollar just getting ready to launch again to go higher? Or maybe if it's going to continue to follow the bond yields to the downside. So just a quick reference. So we're not confusing folks here, right? So take a look at the bond yields and the daily chart. See it sold off. That's the 5-year. That's the 2-year major. 10 and 30. That was all daily chart there. So there is some type of bearish trend forming with these bond yields. So if the yields go down, odds are, right, dollar should follow that too. But sometimes there has been a cracking correlation. We've seen dollar rally, but bond yields keep dropping, which shouldn't happen. Should not happen. If yields drop, dollar should drop. If yields rally, dollar should rally. And there's many times where we haven't seen that correlation been perfect. It's been out of sync sometimes. So we'll see what's going to happen moving forward. Just to recap before we end the video, to bring it back home, we want to see if we could get a high probability raid on Tuesday's high when this new daily candle opens. We could, right? This is aggressive stance. We could go long simply at this candle's close, or go long simply at this candle's open here. So you use a buy stop and a buy limit order, trigger yourself in on weakness going down, or trigger yourself into strength going up. Buy going up or buy going down. I would prefer, while price action is dropping, to buy. It feels scary at first, but it's the most reasonable thing. You want to buy as price is dropping down because it's cheaper. Peace.